Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Wednesday, the 23rd of April. Starting off with the S&P as usual, and here we've basically pivoted on the other side now of the old May to August support area, 5220. Above 5220, looking for that resistance line there from December, 5400, which hopefully after the latest news regarding Ukraine we will achieve. But the key here is to getting through 5450, which has been recent resistance on the way down. End of day close back below 5220. We're looking at potentially having to retest the lows under 5,000. Moving on to the Nasdaq, and here also a recovery in the air, but still blocked by a line of resistance. Old support line broken and now become a new resistance line at 18,400. Above that, we're looking for 19,200, basically recent mid-April resistance on the way down, but only above that 19,200 area gives us the 50-day line, which probably we are seeking. We haven't been back above that since the end of February at 19,800. Now, moving on to the stocks and revisiting one or two as well. Agenus, rising trend channel base here. We were looking for the top of the channel to be hit. So that's a channel there from back in November. The resistance line projection of the channel around $4.80, above the 50-day line at $2.26. That's what we're looking for by the end of next month. Moving along to Bowen, and here exceeded expectations by quite some margin. The black rising trend channel base there had its peak there at $10.20, which is what we were looking for. Obviously, we've blown the lights out on that. Now we can look for potentially the top of the red rising trend channel there from the turn of the year. That's heading up to $18.14, and we're looking for that by the end of next month or even sooner, especially while we're above the old resistance on the way down at $11. New name for at least for the near term is Gelteq, and here a bit difficult in the sense that we've just gapped up after lots of bullish divergence going into the move higher that we had. You can see that there was an uptrend line there from the early part of March. But the current situation is that we were looking for support to come in. Probably the lowest would be the old resistance on the way down in February, around $2.30. So while we're above that, looking for the shares to eventually head back to the top of the range, up to $5.50 by the end of next month. But the key here is staying above $2.30. Obviously, at the moment, got the pre-market indication of $2.28. Revisiting the next stock, Icoreconnect, and here, after just missing out on the top of that broadening triangle base that we had, shares back at the 50-day line, which tends to happen quite a lot. Above that 50-day line, $1.84, looking for the shares to at least head back to $4 plus, which was resistance on the way down. Bit of an RSI 50 rebound as well, helping the cause. On to a stock which is new to us, and it takes the form of Meiwu or Meiwu, and here we've got a broadening triangle base. Obviously, it's been a rather horrific journey on the left-hand side of the chart, but broadening triangle here, and a bullish bear trap island reversal, so gapping down at the end of last month and gapping up now. Need to see an end-of-day close above the 50-day line at $2.74 to give us a top of triangle move as high as $5.80 by the end of next month. Ideally, we stay above recent resistance around the $1.80 level. Recent resistance on the way down, that is. Good looking chart from the next company, which is Novagold, and here you can see we've gapped through a rising 50-day line and gapped through recent resistance, basically taking out even October resistance around the $4.20 area. Probably the moment the safest thing to say is that while we're above the last October resistance around $3.90, we're still looking for a top of triangle target as high as $5. See the pre-market over there at $4.07. Next up, a situation which is called China SXT, and another broadening triangle. Here we got resistance at the 50-day line, so looking for an end-of-day close above that to give us a potential move up to $6.30 by the end of next month. If you're cautious, you're probably looking to buy on any dips towards yesterday's support at $1.18, with an end-of-day close stop loss back below that particular level. Moving along to Safe Pro, and here we gap through a rising 50-day moving average. That's at $2.98. Above that, we're looking for the top of the range and the top of that triangle from December, as high as $5.65. And we're looking for that by the end of next month after the bear trap gap reversal we've had from below February support. On to Tivic, and here what's interesting is that we were gingerly looking for the shares to hit the top of that, or hit that resistance line there from back in March. Obviously, there was a bit of an overshoot, and that became new support ahead of the latest move to the upside. Current situation obviously rather difficult in the sense that the price action in recent months or over the past year looks like a heart trace monitor, but what we can say is that above recent resistance, April resistance around $5.60, the glass hit half full, and then maybe that's the area to try and get into the situation with a stop loss back below the 50-day line, $4.98. Finishing off with VCI, and here we also have one of those situations where we're trying to bottom out and looking for the shares to hit the top of that, basically recent support, recent broken support there, and the 50-day line near $11.50. That is valid while we hold above recent resistance, which was the neckline resistance around $3.20. So above $3.20, looking for a recovery there at VCI. That's it for me today. More updates tomorrow.